Tape Reading Concepts. My name is Nikolai, and today I'll discuss the rather advanced concept of mean reversion. It is a question I get very often: what does mean reverting actually mean? No pun intended. It has nothing to do with the market's ill temper or its tendency to run to your stop, but it rather refers to the statistical term mean, which is the tendency towards a central value. This is often my practice. I will discuss this concept in the context of a specific situation, and that's why we're going to look at this transitional moment between last week and this week within the COMEX gold market. At the left edge of the chart, the story begins with balanced sentiment during Thursday afternoon within the mid-60s. The beginning of the Friday session brings the sellers to the table during the Far Eastern portion, a $500 measured pullback around midnight, and more selling during the European portion of the session. The sharp turn in the beginning of the US pre-market suggests that buyers perceive prices below 1850 as a bargain. Notice the micro pullbacks and the aggressive migration of the bid higher and higher as we move through the 50s all the way towards 1860. That's $1,000+ move, which suggests that the bottom is in. In the latter portion of the US pre-market, it takes a good hour to hammer out a base before 9:30, and the first hour of the regular session moves us towards 1870. It takes another good hour to build up the next base here, and notice that there's aggressive selling pressure, which suggests profit taking once we get close to the round number 1870. For the remainder of the morning session, the lunch hour, the afternoon, price makes no significant progress, and the one excursion above 1870 is met by selling with a consensus close below 1870. That's coming on top of already significant profit taking as we get close to 1870 for the second time following the end of the first hour of the regular session. Let's summarize what we know about this market so far. We started with balance in the mid-60s. We had a bearish rotation down to below 1850, where price turned aggressively and rotated all the way towards 1870, yet seemed unwilling to go any further by the end of the session with some significant profit taking just below or around 1870. Overall, we have seen a center, a bearish rotation, a bullish rotation, and if we follow the idea here on Sunday night, we see yet again an open above 1870, which gets aggressively faded to close the gap, followed through by more selling during the Far Eastern session, with a door forming around midnight and going into the start of the European session. Notice the price, 1860, the door just below, close to the middle of this already well-established range of about $2,400 per contract, from just below 1848 to highs around 1872. It seems that's exactly $2,500 per contract. This is a great example of mean reversion. It is a form of sideways movement in the macro sense, where we observe successive rotations in each direction while price oscillates around a center, in this case around 1860. So how did I take advantage of this mean reverting environment? The key lies in how the context evolved in the new week or over the course of the Sunday night session. Initially in the Far Eastern portion of the Monday session, which is the Sunday night open up until about 2 a.m., the implications are bearish. That's what got us back predictably to the middle of the mean reverting range established from Friday. We are around 1860. The default expectation here would be that after some predictable back and forth in the middle of the range around 1860, we're eventually going to continue within the current rotation on the way down towards the bottom of the range or towards 1850. Let's follow the tape further and see what happens. With the beginning of the European portion of the Monday session, around 2 a.m. Eastern Time, buyers come to the table, take the market higher, and after initially holding the last confirmed minor swing high, we get a pendulum pullback, a higher low forms, and the pressure takes us to higher prices. As is often the case in mean reverting environments, important decisions could be taken in the middle of the range where the consensus lies. In this case, the decision has bullish implications. We have higher lows and higher highs moving towards the Sunday night high. If we follow a little further, we'll see that the orderly buying eventually transitions into a steep run which extends all the way towards this important reference point, yet the market stretches and doesn't break, which is a significant bearish implication. You see that the sharp reaction of the reference point at the top, 1873, garners a 50% pullback, and then the sellers stabilize price and offer pressure, which eventually resolve towards lower prices. It seems in total that we have a fractal pattern, or in other words, we have a mean reverting Monday session that is set inside the upper half of the range established from Friday. Within that context, I'm looking to position long, close to the bottom of the current session's range, looking for safety for my stop behind the already established bullish interest at the bottom here around 1860. Fortunately, the behavior in the bearish rotation was fairly orderly. The drives down, the same sized pullbacks. There was 1, 2, 3 of these. There was the fourth one here, and as the pressure was becoming tangible, you see that price was momentarily going horizontal. All I wanted to see is the price to dip close enough to 1860, and of course that would allow my $300 stop to be all the way here behind 1858, which would allow the safety from the resting buy limit orders at the bottom here at the door, and of course a little bit of a buffer for noise. Notice the vertical dip here, which attracted my attention. All I waited for is one bullish bar to suggest that the bottom is in, and as soon as this was offered, I positioned right below 1861. The rest here is fairly straightforward. It's hands-off management. We did see a reaction similar to the one in the early morning, a higher low, a higher high, and after quite a bit of back and forth here in the middle of the range, ultimately we got the extension for a classic 3-to-1 exit close to the top of the range, conservative right in front of the round number 1870. Price did pull back again to the middle, so we were offered within the session both a higher low and a lower high, suggesting some type of a compression. What also caught my attention is the slightly higher low context, which since I'm bullish overall because of having a mean reversion in the upper half of the Friday range, I did project higher prices towards the middle half of the week. Therefore, I picked up a long here on a thick shoulder cluster right before the close. You can see the higher lows and higher highs, which ultimately took price to flower outside this session's range into much higher levels into the Tuesday session. I was happy to start the week with a classic 3-to-1 trade. This is my adaptation to the mean reverting context. Let me know if you have any questions in the comment section below. This is Tape Reading Concepts, and I'll catch you guys in the next video.